Hi, welcome to the video day, 27th of August. We're on Sunday. In today's video, we're going to look at our favourite pairs for the week ahead. We've got quite a few charts to look at. We'll go to them in just a moment. Now, in recent videos, have been very focused on the USD. We still like the look of the USD. We've been very bullish. The dollar's had a great run to the upside. We may see a pullback in the short term, but that pullback will be a buying opportunity. There's also a number of crosses we like the look of as well. We'll go over the charts in just a moment, but just before we do so, if you want to learn our trading strategy, check out our daily technical sentiment analysis of 14 FX pairs. All you need to do, go to the link beneath this video and get live access to our member center. You can also follow us on Facebook, join our Facebook group of traders, and join our free educational mailing list. Right, let's go and take a look at the opportunities. Right, GBP USD, just for new viewers, we became really interested in pound shorts and we had this huge surge to the upside. Speculators built up their biggest long position since 2014 and we wanted to sell, and you see a nice decline, well over 500 pips. Okay, now in terms of the move has been a nice one to the downside. There's far more downside to come. I'll do my levels of entry, stop and target in a moment, but in terms of us going lower, we need to look at what's going on behind the chart in terms of big money. Okay, now this is the COT Net Traders positions. For anyone unfamiliar with it, it's a great sentiment tool. It's our favorite. Tracks big money. Two groups we're interested in: the commercials. They're hedgers. They tend to be smart money at turning points. Large speculators, you have hedge funds, etc. Very often right about big long-term trends, but they always tend to get caught out at turning points. Okay, so what we want to do is look for a big divergence between the two groups. Not interested in every twist and turn on the chart, just big divergences. And here you get the speculators build up their biggest long since 2014. Commercials their biggest short. That points to a breakdown, and we get it. Okay, but look at what speculators are doing over the last 2 weeks. They're increasing their longs. They're almost as long as they were at the peak. Then on the other side, the commercials are mirroring them. Okay, just for anyone new watching our videos, I've posted this chart before, but there's the big speculative position in 2014. Look how big the decline is. This is a really long-term chart. Okay, at the time we were coming above 131. We've seen a little bit of downside, but we think there's far more to come. Why are speculators so bullish? Well, they think Bank of England are going to raise rates a few more times. We think they'll probably raise just once. If they raise a few more times, that's in the price. But what the market is not seeing, in our view, is that if the Bank of England raise rates, the recession coming in the UK will be worse. They're not actually seeing a recession coming. Okay, just going to show you a couple of charts very quickly. This is an article, one of several I'm going to post in relation to the pairs I'm talking about. Be beneath the video, you can just check the link. Last week we had PMIs are a leading indicator. Services PMI being strong is inflationary, but look at it, it drops down from up here to below 50 in contraction. That will please the Bank of England. Okay, composite PMIs are down as well. When they go down, they can impact on GDP, or they warn of GDP going down. Now, for anyone thinking the UK might avoid recession, look at this, barely any growth. Obviously, this is a lagging indicator. The PMIs are forward-looking. We expect contraction in the UK. So British pound to go down. Okay. Now, I'm just going to use the charts from our member center. For anyone new to our videos, again, we do not use complicated technical analysis. It's simple. It's just big levels. We already have a view from, the sentiment and big fundamentals, so we can keep it simple. Now, in terms of this one, there's two ways of playing it. We're already shorting at 129.20. It's our second trade since the fall. And we've got a stop at 127.20. So if you've come up to these resistance levels, you could sell off them. The COT divergence points to 123, then 121. Okay, speculators should get hit on stop in our view. Now let's just say we do get above 127. let's say our stop is taken. You can see what we'd do. We would sell at 126.90, back through the level, stop behind 128. Got heavy resistance up here. So yeah, I would expect more downside in the pound, and rallies are selling opportunities. Right, next pair is going to be Euro USD. USD, another nice decline. Now, in terms of this one, we did have a couple of nice rallies to the upside and a quadruple top just below 69 level. Market was looking for China to basically take action to basically boost their economy, which is slowing. Now, we've sold off. Now, a lot of people say there could be a mild downturn in China. A lot of people see it recovering. It's not going to recover. Commodity demand is dropping. All commodity currencies are going lower. Before I do the commodity currencies, I just want to show you some background. Now, in terms, again, this article is on the link beneath the video. This chart here shows the percentage of basically professional investors, forecasters, percentage saying of FMS investors, saying global recession is unlikely in the next 12 months is increasing. They're getting optimistic. There's no optimism in our view if you look at the facts. I'll just show you a few of these charts. You can check the rest later if you wish. Global manufacturing, okay? New orders, they've dropped heavily. That means PMIs will follow. We're already in contraction, okay? Global business confidence is down. Prices charged, down. This is due to lack of demand, okay? Let's take a look at industrial metals. We're fighting around a major support level. We expect them to fall further. I showed this chart before, which is container rates for major shipping lines. Look at all the ones from China, all going south, okay? This is dry freight. So goods aren't moving. There is no demand, okay? China, and a lot of people don't realise how important it is to global GDP, okay? Now, if you look at it, this is the contribution to world 10-year real growth rates. China has been the one that has provided the most growth, okay? Way ahead of the US and other major industrial countries. But, of course, now China is going down, and none of the other countries are going to be going up significantly. So China's slower, bearish for commodities, commodity currencies, and just basically it's a massive fundamental. Market too complacent about a global recession. So commodity currencies, they can bounce, but they're going lower. First commodity currency obviously now will be AUD USD. AUD USD in at 67.90, and it's been decent move. Well, it's been a really good move to the downside. I expect some counter trend action. You've got double top here, then the big 65 level. You can see our stop 65.30 behind the level. So you could sell off this double trend line resistance. If we do surge the upside and our stop is taken, all we'll do, sell back through the 65 level with a stop behind 66, behind this tail here, those bodies there. We could rally a little bit more to the upside, but there's going to be no trend change coming in the commodity currencies in our view. So rallies will be selling opportunities. 61.20 on the downside. We may go even lower than that. That's the monthly support level. NZD USD. Again, it's a bit similar look to the Aussie, really. Got double top there. Then you've got the 60 level, 20-day moving average. That should provide resistance. You can sell off the resistance levels. If we're stopped out of this one, we get above the 60 level, our stop is taken. We just sell back through 60. Stop behind 61, probably this tail here, 61.30. Last major commodity currency will be USD CAD. USD CAD long at 131.20. It's had a really good move to the upside, but I still think there's 400 pips more, up to 138, then off to monthly resistance at 140. Now, if you look at the USD, it's coming up here, okay? Crude oil was pretty strong, not helping the CAD. Obviously, Canada, major exporter of crude. We're expecting crude oil prices to fall, so that should put a floor under the USD. In terms of this one, again, I think we're going to get a pullback. You've got two levels of support here. You could look to buy the pullback. Our stop is back behind the 135 level. You can see it 134.90. If we're taken out, we'll buy back through 135, stop back behind the next big level of support, behind 134. If we don't pull back, let's say you get a nice blue to the upside, you could go long, stop initially behind here. But if we get a real nice move to the upside going on through Friday's high, you could probably pop it behind this level of support here. So yeah, commodity currencies hopefully going down. Where are we going next? We're going to look at just a few minor or USD pairs, then we're going to take a look at some crosses. 3 USD pairs, and then we're going to move to the crosses. We're just going to do them very quickly. This is USD PLN. PLN, Polish zloty, is a euro correlated currency. It's now our favourite against the USD. We've also been doing USD NOK, USD SEK. I covered them in the last video. They've had great rises to the upside, but I think now it's the PLN that is going to go down on the USD. USD should push up to 445. Okay. Now, in terms of an article, USD PLN, you can check it beneath the video. We're just out now, bearish of the zloty. If you wanted to come into this one, go through 415 and then look for 435, then 445, or buy dip off first level support. If we were stopped out, we'd go back long above 410, stop behind 405. So risk reward, obviously our view's got to come to fruition. Looks really attractive, but there is event risk in this one, in our view. Economic fundamentals 445, percentage change on that move is 11.25%, no leverage. Okay, if we get escalation in terms of Russia Ukraine, you could get another 12.4%. okay, it is possible that the war escalates with Poland's getting involved. Logic in the article, but yeah, our favorite euro correlated currency to sell. Now we're going to go to USD CNH, a dollar against the offshore spot Chinese yuan. Now, in terms of this one, big uptrend. You get some corrective downside action up. Now we're just kind of hanging around. This pair, I think, is really attractive. Now, in terms of China, we've already said they've got big problems. One thing they can do to help their exports is to let the USD rise on the yuan. And I've picked out we could go as high as the 8 level, okay, which would be more than 10%, okay. It's not going to solve China's problems, but it will help, okay. Now, in terms of upside, looking for new multi-year highs, it's worth a small position in our view. I know plenty of traders who I speak to on Skype who've got really big positions in this one because it's got a really attractive carry on it as well. Okay, so in terms of, if I go here, this is the 1 year MLF rate in China. Look at it, down below 2.5. okay, US rates are more than double. Okay, so this yield gap is the largest since 2007. So you can pick up a nice bit of carry as well. So we really like the look of the trade, obviously. Last USD pair I'm going to do, USD SGD. Singapore dollar. Singapore dollar is one of the most heavily correlated currencies in terms of global expansion and contraction. When the global economy contracts, it tends not to do well. Also heavy exposure to China. We've seen a big rally. There's way more upside in this pair. If you want to go long, I'd go long above 136 with a tight stop, 135.30. So go 136.20, just clear the round number. Then you can go and look at the monthly resistance yourself, but 138, 140, then maybe even 144 on the upside. So yeah, big upside potential. We think the risk is low, obviously. If we were to be stopped out, let's say we do see the Singapore dollar fall, we'd probably look to key off the 135 level on strength with a stop back behind 134, the 20-day don't quite know how this might move at the moment, but you can check this pair in the member centre. So yeah, they're the USD pairs. Now just one chart to finish off with, which is not a pair, but just hedge fund positioning dollar shorts. Okay, this is just generally in the dollar. They're heavily short this year. Okay, they're covering some shorts, but there's plenty more to get taken out the market. Dollar should go higher. Robust economy is doing better than any other G7 nation. Interest rate yield is good. They may have to raise rates in the US, which the market is not really thinking is going to occur. And of course, you've got a slowing global economy, which is generally bullish of the USD. So USD looks good. We'll see what happens, but now we're going to go and take a look at some crosses. Now I'll look at a couple of pairs that have caught me out recently, which are JPY crosses, and the first cross is going to be Euro JPY. Right, first cross Euro JPY. I'll just look at the levels in a moment, but just first of all, I want to look at speculative positioning. Now we know that speculators are heavily long of the euro and of the GBP, and they're also short of the yen. Now this isn't official data, but if we want to get the cross data from the COT, we just look at what's going on in the majors, and then we're going to express it as a simple ratio of longs over shorts. Okay, now in terms of euro JPY, 7.3 to 1 for speculators. They're the first column in terms of longs over shorts, so very bullish. Commercials 3.9 to 1 in terms of shorts over longs, so bearish. Then we're at a divergence of 11.2. Any divergence above 10 will get our interest. So it's a nice divergence historically. What about GBP, JPY? 6.8 to 1 in terms of longs over shorts. Commercials 4.2 in terms of shorts over longs. We've got divergence of 11. So both north of 10. We're looking for the euro obviously to fall. Euro JPY, we're just basically below this resistance line. You can see my stop is behind the level. I'm in at 158.50. I've got it tight at 158.30. Okay, now if resistance doesn't give way, we can break the support level here. That's 156.90. We should get, well, we're looking for a spec hit to these support levels. Okay, so it's a good risk to reward on a break lower. If we get taken out and stop, I've got a feeling we might, we would just, this level of resistance become support. We'd sell back through it with a stop behind chart highs. Now, yeah, it's been pretty choppy in yen pairs and we've been caught out, but we're doing small position size at the moment, looking to obviously increase that if the yen does turn. Now, if the yen turns, it will turn in a big way. It's the most oversold major. If you read forecasters and analysts, you'd be hard pushed to find any who are bullish of the yen, which could mean the bad news is in the price. Okay, we shall see. Right, let's go to our next pair. GBP, JPY. Again, couple of low volatility candles. If we can break support, you could go short. You could use similar stop to ours, 185.20, just behind this level, and then look for quick follow through as specs get hit. What about if we break higher? It'd be the same. We'd basically sell back through this level with a stop back behind this double top behind 186. Just haven't drawn the level in. But yeah, JPY, it's been very frustrating. But yeah, we're going to have a go. Well, we are having a go at some yen longs. Now, in terms of the last couple of pairs I want to look at, they are going to be commodity crosses. Now, I'm looking at AUD CAD first. Now, obviously, we're bullish of the USD on all the commodity currencies. But what we think going forward is that AUD and NZD will be weaker on the USD than the CAD. Why? Because AUD and NZD are exposed to China. Chinese economy is in much worse shape than the US, which has got a robust economy, which is Canada's major trading partner. And we did have a decent profit from a trade we took through the 90 level. We recently got stopped out and now we've re-entered at 87.40. So my view is if you wanted to sell, just go through 87, or you could take a move to first level resistance, look for weakness, stop behind 88. Now, in terms of the first support, it'll come in soon at 86, but then we could run on all the way to 82. They're slower moving pairs than the USD pairs, of course, but potential really, really good. Last pair, and we didn't get stopped out of this one, in at 83.80. She's come down and now we're at 80.23. So yeah, really good profit in this one. How would you play it? I personally just think it's a sell, or you could wait to sell off the 81 level on weakness. Yeah, hopefully good downside in this one as well to 77.30. If we were run on stop, we would sell back through the level, stop back behind 82. So there's some crosses to look at as well. August has been decent volatility. So yeah, we'll see what happens, but that is the forecast for this week. Thank you for watching.